Hey everybody, this is Ryan Mallory doing another FAANG update with you guys. That includes Facebook, Apple, Amazon, Netflix, Google. Maybe I'll throw in a few other charts in there as well. And just talk about the general market, what we're seeing out of it right now, and what we can expect out of it going forward. So S&P 500, obviously it is... it's on a tear over the last 5 days. I mean, we saw last week where the market was really struggling, particularly like on Tuesday and Wednesday. I even took a short position midway through the Tuesday trading session. It looked like it was going to do well at the start of Wednesday, and it was like 5 minutes down, and the rest of the day it just ramped higher. And so I got out of that trade flat. And the S&P 500 since then has just gone straight up. But if you look at the other indices, it's the same story. The NASDAQ's up, I think, a seventh straight day right now, or working towards a seventh straight day. And then you have the Russell Index, which was actually trading much lower today, has put in a hammer candle and is trading at break even, slightly green. So you have a series of lower highs and higher lows on IWM, so it's going to be interesting to see how that coiling plays out. It's been playing with the 50-day moving average some, but overall, I think that chart looks pretty healthy as well. You have DIA, Dow Jones, finally starting to play a little bit of catch up with the rest of the market, so that's a good sign too. And then you have some diverging indicators like the T2108, which isn't really showing the same enthusiasm that the rest of the market is. I mean, you can see T2108 peaked back in mid-June, and since then it's just putting in higher or lower highs, and it's just not showing the same momentum that the rest of the market has been showing. So that's the big divergence, in my opinion, out there in the market. And the breadth isn't always that great. Earnings, I don't think earnings, I mean, they'll probably, tell you that it did good, but you saw a lot of big names just get really pounded. None other than Facebook for the most part. So talking about Facebook, I got on this one last Thursday, sold out of it yesterday. Yeah, I still wish I was still in it some, because this stock has done pretty good today. It's up about almost 1.25%. I got in at 174.80, so it wasn't quite out of the woods yet when I got in it. So right down here, but it was starting to come out of this base. It looked good. It was holding this support level, and this is what was key to me the whole time, was this 169 level that it was holding. And it did, and it was putting in a good bullish engulfing candle pattern. So I got in long on that one, 174.80, and I sold it yesterday at 184.14. And while I would like to have held it longer, when we got towards the end of the day, I'm sitting on about 5.3% in profits. The market has kind of beaten up people who aren't aggressively taking profits of late because of the back and forth. Now, obviously, over the last 5-6 days, the market's been ripping higher, so it doesn't feel as much like that. But you still have to, especially with the bearish divergences that are out there, you have to take profits a little bit quicker than you probably like. And then, of course, you got Amazon. And here's the thing with Amazon and Apple, okay? And I'm going to flip back and forth between these two charts. Amazon and Apple, great companies. Amazon will probably be a $1 trillion company here not too long as well. They're not companies I want to buy at these levels. I don't want to buy Apple at 207, and I don't want to buy Amazon at almost $1,900. Not that it can't go higher, but I just don't know where the real growth is at this stage of the game. I want to buy Apple when it drops back down to like 180 or 170. And yeah, that's probably not happening tomorrow or the next day or next week or anything. But when you do have market sell-offs, like significant ones like what we saw just even back in January, it can create some huge buying opportunities in these big names. So I'm looking for the bigger pullbacks in the names like Amazon and Apple. I don't really care about playing them. And I felt that way, for the most part about Facebook too, until we had that big earnings drop. And it would have been amazing if we could have got that out of Amazon and Apple, because I think it would have been some great buying opportunities that were presented similar to Facebook and Netflix. So Netflix, I got in on this one not yesterday, same day as Facebook. It was August 2nd. Got in at 342.96, and this one hasn't been as great of a bounce, admittedly, as Facebook. Facebook, I mean, it just really took off. Netflix has still been languishing a little bit, and you can make a case, and this is why I tightened my stop and ultimately got stopped out of it today, why Netflix, that Netflix is actually forming a bear flag. So I am a little bit leery of that. You can almost say that, and I'm doing a lot of almosts here because nothing's really clear cut about Netflix right now. It's not decisive about wanting to go higher. There's some resistance here at the 355 level. You can see that this is here area right here, that's some resistance, and then you go back over to here. This here is some resistance. So there's some trouble still in Netflix. And if you draw this trend line, and I hadn't even looked at it or noticed this until this video here, but if you look at this trend line, I think that could possibly pose some resistance to the underside of that broken trend line. So, you know, there's definitely some things to be concerned with there. I got out at 349 or 348.92 to be exact. So I took about 1.7% on that trade, not a ton, but overall still a good trade. I still think this is a little bit more of a choppy market than what we have grown accustomed to, like back in January when the market was just ripping higher. For the most part, all of 2018 besides January has been a lot of choppiness, and I wouldn't be surprised to see more of that as we progress into the midterms and the market starts getting maybe a little bit uneasy about the direction of the country in that regard, as well as these tariffs, because China has yet to really back down on the tariffs. They're up in the ante too, even though I think the U.S. has the upper hand on the trade war in that regard. So finally, Google. I kind of put Google in the same category. I mean, this is like what, an $800 billion company. It follows the same logic. How much upside does it really have, and how fast is it going to get there? Okay, maybe this could be a $1.6 trillion company at some point, right? And it probably will be at one day, which would be about double what it is right now. But I mean, is it going to get there very fast? I mean, are we talking about a stock that is moving now as fast as like what Netflix is moving, or what a stock like even more so like Square, SQ, or Wayfair? No, they're not. It's not moving that fast. So I've been steering away a lot more from the FAANG stocks. I only took advantage of Facebook and Netflix because they had just got them pummeled after earnings, and they were bound to create a trading opportunity after that. But Amazon, Apple, and Google, none of those did that. So really, you're dealing with stocks that probably aren't going to go anywhere really fast. And then let's go ahead and look at some of these other high-flying stocks like Square. I've been looking at this one the last few days. You can see that it's consolidating over the past, I don't know, since the beginning of July about. And to make that a little bit more apparent, I'm going to draw a box for you so you know exactly what I'm talking about. Look at this. Going back to early July. I mean, this has just been contained price action here, so it hasn't really gone anywhere. It's just sort of back and forth. But I think, you know, that right here, I think this is a pretty good trade setup around the $71 level. You have some moving average support at the 5-day moving average, but even much more notably so with the 20-day moving average. So that's something that you can put your stop loss right below and then get long on it and go from there. With the market being up so many days consecutively, it likely gives us the possibility that we're going to see a pullback in the next few days. So I think we're probably going to see some profit taking after the rally that we have been on over the last week or so. And don't be surprised by that. It doesn't mean that the rally's over. It just means that some people are going to start taking some profits here. But SQ, the chart looks pretty good on it. I mean, it needs to get over 73 for us to really put any confidence behind the rally itself. But if you wait till it to get to 73, you may not have a chance at it. At least right now, you still have a trade setup, even though it has some resistance overhead. You're doing it based on the assumption that over the course of this past year and beyond, it has just continued to break through resistance levels with ease. So I would expect the same to happen again until, quite frankly, it doesn't. And then you have Wayfair. Had this nasty sell-off. Earnings has I believe it's come and gone on that one. I can double check for you, but Wayfair has earnings in November. So yeah, this one's, you know, come and gone. So it looks. I just wasn't sure if that was the earnings because I didn't really follow the earnings report, but it's hugging the 50-day moving average. Hasn't really done much yet. And then you have Weight Watchers, And I thought about it today. I mean, I've played this one before in the past in a similar trading pattern, and it has done well. I think it was back in February I played it, and it was amazing run. I think it was this one right here where it just went straight up, and that was an exciting trade. I really loved that trade. It came out of that bull flag really well. Now you have a potential bounce off of a key support level, and what support level am I talking about? This support level. I mean, it played it pretty well, and it's lots of support at that 76 level. It's held it. It's trying to bounce. I think tomorrow, if it just dips a little bit, or it dips and it starts coming back up again, to maybe get on that dip. That's what I'm watching for, anyways. And that's gonna do it. I hope you guys have a really good trading session. Hang in there. Don't make any crazy bets into earnings for the ones that have yet to report. Still, manage the risk and let the profits take care of themselves. Take care. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splash zone. Thanks and happy trading.